Hey guys, so welcome to my new video, and in this video I'm going to be talking about money management. We all heard money management is important, if not the most important thing, but what is it? So hopefully in this video I'm going to explain a few guidelines that you can go by, something that I have applied myself in the past with some success, and you can observe that happening everywhere else as well. So I'm going to start with talking about objective risk, what that means. Then I'm going to go into illustrating what does it mean, the differences between a businessman and a gambler. Then I'm going to go into the nature of quickly rising success. Then I'm going to go into business exit strategy. And I'm going to be talking about how do you actually, I'm going to give you a few guidelines, how do you actually manage money? Okay. So, the first thing that we need to understand with the money management is that it's not really a money management. It's you managing yourself, your own behavior, right? Because you do understand it's everything is what you do, and that's that's what it depends on. So you can't really manage money. There's something outside of you. You can manage yourself. So money management is really management of your own behavior, and we're going to try to go into these types of behaviors and why we do certain behaviors and why we do other behaviors and why some people are successful and other people are not. And hopefully we're going to boil down to these few little discrepancies in the behavior that you can identify and perhaps no longer do that if that's the way you want to go. If you decide to remain to be a gambler, there's nothing wrong with that either. But then there's few other things you have to understand in that sense. So for example, the difference between a gambler and a businessman. I'm not saying anything's bad with the gambling. However, if you decide to be a gambler and you enjoy that type of adrenaline rush and a dopamine jolt and all that kind of thing, there's nothing wrong with that. I'm not against it, but you need to be absolutely comfortable with having absolutely nothing. Okay, we don't really have anything anyway, so that's why a lot of gamblers, when they lose everything, they feel a very deep spiritual connection, because they realize, oh my God, there's nothing really that I have in this life. It's all a game. So so it's not necessarily going to be a bad thing if somebody loses everything. This could be a sort of a blessing in disguise. Okay, that's why if we go out there now and say, hey, stop being a gambler, maybe I'm going to be preventing you to have that epiphany that you need to have. Okay, so again, I'm not saying that anything's wrong with the gambling. However, if you want to go that way, I highly advise you go into something spiritual, so you understand that if you're in a position where you have no friends, no family, no money, that you are taking it as a man, so to speak. Okay, and not whining and wanting to, harm yourself. So, okay. So now that we got that out of the way, let's go into the other side of the coin. Should you decide to be a businessman, not a gambler? And I'm going to start with sharing my chart. It's not really a chart, but there we go. So you should be able to see a few notes that I made. So this one is very simple. It's money management guidelines, and what do you do specifically with the money that you profit? Okay, and these are the general guidelines. You don't have to follow them specifically, but there's something like that you need to have. Okay, so I'm gonna go into each one of them in a second. But before we do that, let's go to objective risk and then go to the charts illustrating the businessman and a gambler behavior. So objective risk is obviously, you want to try to be as objective as possible about the risk. What does that mean? For example, if you decide to start the business Okay, so it's a high risk or is it low risk? Well, if you are talented in that field, you have the experience, and you know all these different boxes are ticked, then it's probably not going to be that high of a risk for you to start it, especially if you're not taking any loan and you're starting off from your own resources and efforts rather than relying on the cash injection. Okay, so that's very important. If you're relying on the cash injection, then it's probably going to be a little bit higher risk. So first of all, you have to understand and be objective and say, is that a high risk or not? Same thing with the trading. So if you're a smart person and you've really killed it in other areas of life and you go into trading and you think that that intelligence is going to help you in trading, you are in for the surprise. Your intelligence, that type of intelligence, is absolutely useless. It's not only useless, it's harmful. So, and I'm sure, you know, all the smart people that have been attracted to it, they learn that very quickly, that oh, you know, I've been living my life one-sided all my life. There is this other side of the coin that trading forces me to face, that I have to learn. Okay, because now I'm going into trading, and I'm having my ass handed to me, and then I'm like, okay, what is happening? I thought that I'm smart. Why things happen like this? And then it's very dangerous, because especially if you rely on that type of intelligence, on that technicality, in having success, you are using a wrong tool, first of all, because you're dealing with the chaos. You're not dealing with Newtonian physics. You're doing the quantum physics. So, and the chaos is not random. I keep saying chaos is not random. It's not the same thing. So there are tools that you can apply, but it's not the same tools that you're applying in other areas in your life. So as a consequence, you will see that, oh, there's this area that I'm completely oblivious about, and my logic and my intelligence is not a useful tool for that. And a lot of people can experience that with the shrinking self-esteem. If you go out there and trade, and your self-esteem is shrinking, the more you trade, the more it's shrinking. It's a perfect sign to tell you that there's nothing wrong with you. You're just not using the right tool in the market. Okay, that smartness, that logic, that intellectual prowess that you have, it's not gone. It's still there. It's just that it's not useful in the market. Okay, so so you have to be an object. For example, if somebody like Ugly Old Go Trades speculates rather, right? So the risk for him is not going to be as high as for somebody who just watched a couple of videos and excited to, like, oh, I got it. All I got to do is if then, and I got it. And of course, the outcome is not like that at all. So for that person, if you decide to go into trading, you have to understand that there's going to be very extremely high risk for you to go right off the bat. So what you need to do is practice with the small, and realize that it takes time, right? So if you trade it for a year with like $100 account and turn that into 1,000, 10,000, or whatever, then maybe you're ready. Okay, so you understand that then your risk is not going to be as high as when you started. Okay, so give yourself time to be a white belt. As I always say, give you some time to be a white belt, and don't be in a rush, because in a second I'm going to show you what happens when you rush and when you have a very quick success. You don't want to have too much of the quick success. There's certain laws in the nature that prevents you from having the exponential increase on the chart, right? So same thing with your success. There is no such thing as exponential increase inevitably, right? But there is a quick few ways to realize, and if you start any business and it kicks off and it's really successful, there you need to have the exit strategy, because especially if you're having that exponential growth, there is an exponential success. It's not sustainable. I'm going to explain why. Okay, let's go into this chart illustrating business myth and the gambler behavior. So what do I mean by that? Well, first of all, we all know this X and Y axis, which is very basic and simple, right? So let's say we have the X and the Y, and I'm gonna start with the gambler behavior. So the gambler behavior goes like this. It goes like this, like that. Okay. So what do we have on this axis and what do we have on that axis? On this axis we have we can section it in a few blocks, right? So in this axis what we have this is a speculation, right? So we have a speculation, we can like, S. So that's speculation. This is a low risk long-term investment. Then this could be a business. Okay, this could be business right here. This could be less of a long-term, but let's just speculation, business, and a long-term investment. Okay. So this chart is showing us this type of behavior. A gambler is putting a lot of the energy or the money or the wealth or whatever you call it in speculation territory. Okay. And most of their equity goes into speculation. Okay. And very little in the business, and even less in long-term investment, something that lasts, more than 5 years. Like as an example, real estate is very low risk, steady investment. It's slowly appreciating over time. It's not doing anything crazy. There's always a cash flow coming in through your rental, income, plus the capital gains over it. So it's very slow, very low risk type of investment. And again, if you are new to this, there may not be as low risk. So you have to educate yourself. You have to learn how to invest in real estate, and then do it. And some people say, well, don't bother investing in real estate. Why don't you invest into real estate stocks? That's a legitimate, that is a legitimate proposal. But the only reason for this proposal is just like, why bother with the tangible real estate? Because it's not really passive income, because you need to be monitoring that as well. That is not exactly true, because you have the property managers, you have people around you that's their job, right? So you're just giving employment, and you have that property, and you don't really need to manage the property yourself. So it is a passive income if you structure it right. However, investing in real estate stocks, that could also be a solution if you don't want to go this way. However, there's also sort of drawbacks, because when you have a house, the house is house. It has you have it. It's tangible. It's there. If the stock market crashes, your house is still standing, still taking the rental income, in some cases even more rental income than usual during those harder times, because people lose houses, they need rent. Okay, so it's very solid. I would say that definitely focus on that. And the business is also something that you need to follow. You need to have whatever you're talented on. That's your business. Okay, and you gotta work. You gotta invest in that a little bit, right? So if you get good gains from the speculation, you don't put it back into speculation. You gotta put it this way. So so I'm gonna go now. I'm gonna draw the other chart, and that is a businessman behavior, right? No, sorry, maybe a little bit too. Yeah, like that. Okay. So low risk, then you have business, and then we have speculation. Okay. So whenever you're putting in speculation, you don't put everything you got in speculation, right? What you put is you put a fraction of it, because it is a speculation. You want to keep most of your wealth into the slow appreciating long-term investments, then the business is a little bit more risky because they come and go, and I'll explain why in a second. It's not that you're failing, okay? It's not that you're failing. Every 5 years, there's a natural tendency to cycle and your business is becoming obsolete. And I'm going to talk about it in a second. So it's a little higher risk than the real estate, for example. But it is a lower risk than a speculation, of course, okay? So whenever you get good gains in a speculation realm, what you want to do is you want to go with this guideline. And this guideline is telling us, okay, what do I do? Let's say you had a really good profit from your speculation. You had a tangible profit from your business. And then you had that slowly appreciating, and that perhaps some cash flow from some steady cash flow from your real estate, right? And now it's time for you to take out that profit, and what do you do with it, right? Now, if you go with the gambler, right? So you take everything and you put it on the red. That's obviously a gambler behavior. Or you put everything in speculation. That's obviously a gambler behavior. That's not a businessman behavior. That's quite obvious if you look at it, right? So what do you do with it? Well, this is my suggestion. It doesn't have to be like this, but this is my suggestion, and I believe it really works very well. You put 20% back into your speculation. So, let's say you take overall profit and you take 20% of that into the speculation. So if you made 20 Bitcoins out of 2 Bitcoin, you leave 4 Bitcoin, 16 Bitcoin, you pull out and you distribute to other ways that I'm going to go into in a second, right? Same thing with your business profit. If you take that profit out, you distribute, you put some in speculation, some in other areas. You get the point. So first thing, you need to look into low risk long-term investment. So take some of that and see what is the low risk long-term investment. And for you, it's probably going to be real estate, okay? Explore other areas, but I like real estate. Explore other areas, but find out what is that low and steady and low risk and slowly appreciating asset that is going to be, much more in 5 years, much more in 10 years, much more in 20 years. That is not risky. It's not speculation. Okay. Then the second one, we're giving away 10%, and this is a very important one because it's a law of reciprocity and it's a law of the universe. You have to give away 10%. So I know it may sound like, what am I doing giving away, my hard-earned money? It's actually going to help you to have that abundance reality in your life. Because if you give that away, first of all, it's going to help you in a sense of psychologically. It's going to be very therapeutic, right? So you're going to experience very interesting things. If you've never done it before, if you never gave it away, you give it a go and see how that feels. Now, when you're giving away, you have to have responsibility, because giving away is also responsibility, because sometimes when you give to somebody, you are not really helping a person. So same thing, like if somebody, as an example, perhaps, not the best example, but if, let's say, somebody is addicted to something and just keep begging you for it, right? And you give them money, you're not really doing them a favor, right? They may kill themselves. So you have to have some responsibility in giving away. And you give the people who perhaps really just down on the luck, okay? And this is a little bit like a socialism and communism, and it works, and it's good when you keep it between your friends between your family and friends. You need to be a little bit of a socialist and communist. Don't put it into economy, because that's when the bad news happens. We've done these experiments before in the past with socialism and communism, and when you put that into your economy, bad news. So, but you have a friend who's asking for help and is really down on the luck. Just give some for him. Do these things. It's important. It's a money management practice. Okay. Now, next one, lifestyle upgrades. Again, some of you may feel like, oh, I don't really deserve it, and perhaps I shouldn't be, spending this money on the luxuries. Perhaps I should be investing into properties a little more. Perhaps no, I don't care. You have to spend 10% on luxuries, on something, even though if you don't want it. Lifestyle upgrades, okay, 10%. That's not a lot, you know. So if you always wanted the car, and you had a good year, buy that car, okay. Try to buy it without, any kind of loan, right? But but you can buy that car for that 10%. Buy it, okay. So treat yourself. Go on the vacation you always wanted. Don't skip that part. It's a very important part of the money management. Next, we want to go into business upgrades. So you got to sharpen the saw, as I call it, right? So you want to upgrade your businesses, and put 10% to upgrade your business, okay? So what does that mean? Well, that means if you need to get a new laptop, if you need to hire additional person, if you need to just anything to do with improving your business, perhaps focusing a little bit more on positioning yourself in the market, dedicate that money for that purpose, and it's going to help you. Then the business growth, another 10% you put in the business growth. So it's a little different from the business upgrades. The business growth is focusing on expanding that business and whatever that business is required. But make sure that you put some of that there, and don't hesitate, because like I said, if your business, if you decide that in order for your business to grow, there's a point of leverage where if you hire that specific person, your business will grow. Then hire that person. Take the 10%, hire that person. And we're going back to speculation. 20% is back into speculation, back into that type of game. Okay? So now if you follow all that, you are going to be a businessman. It's impossible not to have inevitable success if you follow this type of money management. Okay? Because sometimes you're going to have a lot of luck in speculation realm, or luck and skill, perhaps everything's combined, and you just really have a good run, right? That's the time when you really distribute the money evenly between all these other realms of investments and money flow, right? You got to keep the money flowing. Okay, you got to keep the money flowing. Don't keep putting in the same thing. You got to keep the money flowing. And perhaps that's the best way to describe diversification. Diversification doesn't mean that you put a little bit in every single check coin. That's not diversification. This is this diversification. You distribute between the risk in each asset class, okay, in each game, right? Because real estate is a game, business is a game, and speculation is a game. But the money needs to flow according to that proportion if you want to have sustainable growth and success in your life, and avoid these ups and downs and ups and downs and ups and downs. Okay, if you really value that type of peaceful approach in your life, right? Really zen, really, you're growing slowly, not too fast. Everything's going well. You're being responsible. It is boring a little bit sometimes, but you can make it exciting. But that's the way to go. Okay, next. The nature of quickly rising success. So that sort of ties in is what happens when somebody just has a lot of success way too quick. And this is what we normally observe. We have an exponential growth, right, in that business. It just goes like that, okay? And of course, it can keep rising. And what you will experience in any business, that at some point, no matter what you do, it's not growing anymore. And it's not that you're doing something wrong. It's a nature. It's a natural. It's a natural cycle attractor. It's called, right? So what happens is that it cycles. So whatever you've been doing in the business, it's becoming slowly obsolete, and people are moving away from paying attention onto that and paying attention on something else. So you have two choices at this point, because this is what's going to happen. You're going to have massive drop, and then you're going to go, whoa, and you're going to push all your employees, work harder, what is happening, look what's going on, right? And then you're going to point fingers at everyone's like, look, this was happening, oh my God, what is going on, okay? No, nothing is going on. You have to realize that when these events are happening and it seems like, oh my, there's so many things seem to be destroying your business, that's natural process. It isn't something magic, okay? It's a law of the universe. That's how it works. And you will notice all these other things, why this business is no longer pushing forward. So whenever you have this drop, you don't need to panic. You don't need to push your employees. You don't need to do anything. What you do is very simple. Just keep performing the way you perform. You're going to notice the performance increasing a little bit, right? And this is where you want to sell your business. This is where you want to exit your business. Now, you have two options here. Like I said, you have one option to sell your business, or a second option is to completely reframe your business. Basically, it needs to do completely different. And if you notice all these tech companies, they would be obsolete if they kept doing the same thing. Every 5 years, there's a massive change. They release the device that is completely different to what they released before, right? So it's a continuous evolution, but continuous reframing. Take Google, for example. Google is not the same company that it was before. Look at what Google is doing, right? Because perhaps they understand this type of thing, and they go into all these other areas that are emerging, and that is why Google is not a specific business. It's sort of it's actually the advertising company that is using these resources to invest into very clever ways, right? So that is why it's continuing going up. So you have an opportunity there, but you have to understand that this will happen, and it's nobody's fault. It's not your employees' fault. It's no government's fault. It's nobody's fault. This is a natural process, okay? But if you see this happening, that's what you do. You need to be looking for that type of situation and the exit thing, and just say goodbye to that company. I know you built it. I know you took so much time and effort. It was your baby, and it's difficult to say goodbye to that company. But you have to. There's going to be newborn, so to speak, okay? And you have to let go and sell it to somebody. Maybe somebody else going to reframe it and put, if you feel confused and you don't know what to do next, sell it. Somebody else will know. Or if you do know what to do, reframe your business completely. And sometimes there's might be a surprise that you plan to do one thing, but then the universe is telling you that, look, there's a demand somewhere else, okay? And just go there, right? Listen, don't be too strict into one direction. If you see that, whoa, I thought that we're going to be selling these widgets, but everybody's asking this and this is selling even better, perhaps we should just change the company and go with that. And the answer is yes, you should. All right, so let's go into, and then that's it how I explained the business exit strategy. This is your business exit strategy. The point that I was trying to make, that this is a natural process. Everything that I'm showing you guys here this is a natural behavior, right? Some people are genetically more prone for this type of behavior. Some people are genetically more prone for this type of behavior. Neither of these behaviors are wrong, but you have to understand who you are and learn to live with it, okay? And the gambler will always have more excitement. Well, not always. If the businessman can create the excitement by doing some crazy stuff like jumping out of airplanes and doing some crazy stuff, you can still do that. But the gambler usually in the finance realm will experience much more ups and downs and that the businessman wouldn't. And they will live a little bit more crazy life, okay? So I suggest to find the balance, and I think if you're really trying to accumulate wealth and have financial freedom, go with the businessman. If you're trying to just get, as if you understand that you are a gambler, if you're aware that you're a gambler, then own it, right? Don't say that you're a business, but don't say that you're trying to build wealth or become a financially free. Just own it and say, well, I'm a complete gambler, and and this is the way I want to go, and that's okay. But like I said, make sure that you're totally okay with losing everything you have. All right, that's it for now, guys. Hopefully that's helpful. If you have any questions, please comment down below. If you think that's useful to somebody, please share. And I'm going to be making these videos every week. These little videos, these little tips that helped me, and I saw other people employed, and it was very successful for them too. I'm going to be making those every week. So subscribe, stay tuned, and I'll see you in the next one. Take care.